when the equity markets are crashing and a pandemic is circling the globe, the last thing that the commercial banks want to be is massively short. So maybe, just maybe, keep in mind, they've all been accumulating it. The central and the commercial banks have been accumulating it. It's been reclassified as the only other tier one asset on the planet. And now, potentially, we're heading into a global depression.
Welcome back to Liberty and Finance and Reluctant Preppers. We have a returning guest whom our viewers have been saying, you've got to get Andy Schectman back on. Get Andy Schectman back on. So usually we ask like about a month or two between returning guests, but it's like every week or so they're just beating up on me to get you back on. So we have Andy Schectman, the CEO of Miles Franklin Precious Metals, here with us again. Andy, thanks for joining us again here this Tuesday, March 24th, 2020.
Thank you, Dunnigan. I love being here. Appreciate the invite.
I know that it's hard for you to tell the difference between days of the week or morning and night anymore because you've been working almost around the clock trying to meet unprecedented physical demand. People have a lot of confusing ideas about that because I've been getting lots of questions from people emailing and calling me since I'm now a licensed dealer's representative for Miles Franklin, and I've been able to answer some of their questions, but you've been answering a lot of questions for me. So first of all, that's one of the most common ones we've been hearing is, why is it that everybody seems to be sold out, number one? And number two, how is it that Miles Franklin can still get products? So start out with, why is it that everybody seems to be sold out even though prices, the spot price has been fairly low for the last week or so on precious metals? What's going on with that availability?
Well, there's a disconnection between the spot price and the retail price. And for physical precious metals. We saw this before in 2008. It's the exact same thing that played out. In 2008, the price dropped when Bear and Lehman collapsed and the market fell with it. The price of gold and silver fell with it. Within 1 week of that happening, every one of the five major mints was either completely shut down or out of product for months on end with massive premiums when they finally came back online, premiums of 100% in silver, with 10 or 12 week delivery delays. That was common. This is the same thing that we've seen, or we saw then, we're seeing now, only it's happening faster. Now, I don't think it's because they're out of metal. I just think that, the demand for precious metals, done again over the past couple of years, has been tepid at best. And as I keep saying in many of my interviews, it's been from the choir. And the choir has always been accumulating enough to keep the mint stocked and the distributors flush with product. But in most of the podcasts I've given over the last year, I've been harping on the low premiums, the opportunities in numismatics, and which are now gone, and the opportunities in junk silver bags, which are now $8, $9, $10 an ounce over spot, and the opportunities in the lowest premiums I've ever seen. That's a thing of the past, at least as of right now. But there was no demand over the last several years, so much so that there were anomalies in just about every price of every product that we sold in terms of their bid and their ask price and the premiums associated with them. And now, well, you have the Royal Canadian Mint completely shut down. And the Canadian government is closing all non-essential businesses. You have the West Point Mint, or the U.S. Mint in New York. United States Mint is in West Point, New York. So, if that gets locked down, what's coming out of there? And all of the distributors are out of product, and all the shipping departments across the globe are working on skeleton crews. And this is a whole new situation that we're facing that unless you really, so look, I've been doing this for a very long time. I've been doing this for 30 years. I know a lot of people. I know everywhere the product is. And I've been following this for about 8 weeks or longer, thanks to Chris Martenson. And I've been aware of it long before most people thought it was even a reality. I was getting mocked by some of my friends for doing the things I was doing. Even some of my children thought I was a goofball. So when this stuff started happening, I locked down every single avenue I could think of to get product. And we have been buying as much as we possibly can. What's happening now is really issue of product over the shipping departments are overworked and understaffed, and so just getting it boxed up and sent out is really
Just
really
the
challenging.
logistics.
It's a logistics issue completely and totally, but I don't see it getting any better. Quite frankly, I see it getting much worse.
We have a question from a viewer on that. If while we were right on that point, a Victory CSA says, when customers buy physical gold and silver from Miles Franklin, if there are delivery disruptions due to the quarantine of cities, states, etc., will Miles Franklin hold the metals in the customer's name in an accredited depository for free until such time as delivery can be made?
Yes, and I've made that arrangement quite some time ago, absolutely, and I fully expect that to happen. The Dakota Depository in Fargo, North Dakota would hold all of our clients' purchased metal that was not delivered due to some sort of a lockdown, quarantine, inability to send it for whatever reason in a segregated account for free indefinitely, in a level 2 military grade vault, fully insured indefinitely until such time as people could make it to North Dakota, or we could ship it again under normal conditions. So yes, that has been arranged. Yes.
Follow-on question from the same viewer asking, if the COMEX trading is halted, how will dealers such as Miles Franklin hedge prices in this volatile price environment? In such a situation, how can customers lock in a purchase price?
They can't. They won't, and it'll be wire first, money in hand, and then we ship. And that's the whole premise of the COMEX, which, a lot of people would say the COMEX became the tail that wagged the dog, where speculators were controlling the price. It's supposed to be for legitimate businesses, a farmer hedging his future production, or a gold dealer like myself locking in an order on a verbal handshake. And in order to do that, in order to be able to guarantee delivery in this upside down crazy world where you wake up and gold's up $120 like it was this morning, if you don't hedge something, you're out of business very quickly. So you can't do things unhedged unless you have money in hand.
All right. We've had another set of people asking us on the phone who've called. They're saying, expressing the theory that, well, is it the reason that all these dealers nationally are showing out of stock, wait, is because the spot price went too low, the dealers didn't want to sell the product at low price, therefore they're just holding it and waiting for better prices. Is that a myth, or is that real? Is that real?
It's happened. I don't think it's happening now. I've seen it in the past. And that was always the theory. There's 4 or 5 or 6 very large primary distributors in the industry. And let me put it to you this way. I work with many of the big players in the industry, and they're all out of product. They're not holding anything. They have more business than they can take. And it has nothing to do with holding the product to jack up the premiums. It's that we went from drinking out of a slow-moving water drinking fountain to a fire hose being jammed down your throat that fast. We typically do 30 orders a day and have a very successful business, maybe 40. Now we're doing 500 and 600. And so it's a situation that no one in this industry has ever experienced. So in this case, I would say, no, I don't think it is the primary dealers holding back supply to jack up premiums. I just think that when you see the Canadian Mint shut down completely and totally, now they shut down, they say, for the coronavirus to make sure that for 2 weeks that it's a safe working condition, but they were running out of product, long before that happened. When you see the U.S. Mint run out of gold and silver eagles and gold buffaloes, and the Perth Mint run out of gold bars, this is real, and they have more demand than they could ever dream of having. So there's no reason for them to do that at this point.
We have a question from Lawful Money who says, Mr. Schectman, do you foresee a time when precious metals will be allowed to reach, quote, fair value? I've been stacking for over 40 years and have seen nothing but price suppression and manipulation. Well,
I'm going to answer that in a way. I'm glad that question was asked. And I don't really get to talk this way very often, but I'm going to do it. I believe that indeed the markets have been suppressed for a very long time, and anyone who ignores the reality of the way this market behaves, free markets don't trade the way that this market does trade. And for many years we would see a typical rinse, wash, repeat scenario where the commercial banks sucker the speculators into very long positions, and always right before options expiration date, the commercial banks come in, slam down the price, the options expire worthless, the commercial banks get to keep the premium on the options, the price gets smashed, everyone's disappointed, and it's a rinse, wash, repeat cycle. But yet, it's something that we just grew accustomed to, and we're waiting for the inevitable day of it to break, the system to break. So if we look at gold as being reclassified as a tier 1 asset, I keep harping on this. Let's focus on that for one moment. Gold's reclassified as a tier 1 asset. The central banks have been accumulating it since 2018 voraciously. A year and a half later, in April of 19, they tell us that we've reclassified gold as a tier 1 asset. They continue to accumulate it in 2020, much more so even than the year before. And then in September, we have this repo market crisis. When that happened, the longs, the hedge funds and the specs, as they're called, they built up a massive position on COMEX. So much so it was one of, if not the largest long position in the history of the COMEX market, meaning the commercial banks had the largest short position in the history of the COMEX market that had been growing and growing and growing. And I think that if this coronavirus thing didn't just happen, then we'd see rinse, wash, repeat again. But maybe this is the time the wolf comes for the little boy, because when the equity markets are crashing and a pandemic is circling the globe, the last thing that the commercial banks want to be is massively short. So maybe, just maybe, keep in mind, they've all been accumulating it. The central and the commercial banks have been accumulating it. It's been reclassified as the only other tier 1 asset on the planet. And now potentially we're heading into a global depression. So if you told me that the commercial banks fired their last missile to drive silver down to 12 and to drive gold down to 1,400, I'd believe it, in the respect that when those long positions are being coughed up by the speculators, who's buying all of those positions, those long positions? It's the commercial banks, buying them all the way down to 12 on silver and 1,400 on gold, and then they cover their positions. And then we wake up today to see gold up over $200 almost in the last 2 days. So is this the time that the commercial banks stop manipulating the market? Because is this the beginning of a new reality? I don't know. If you told me that it was, I'd believe it. And then again, I've been the little boy who's cried wolf and been wrong for a very long time. But like I keep saying on shows, you can only run from mathematics and logic for so long before it catches you. And the little boy at the end of the story, the wolf does come. And one of these days it will. And if you told me this was it, I'd believe it.
We have a question here from Rob B., who asks, if the debt clock has silver at $1,500 and spot is $12 to $14, if the debt clock price is wrong, are all the numbers on that clock wrong? Seriously, what is the true price with inflation and the 2% value left in the Federal Reserve note for silver?
That's a very tough question. What is fair value? You tell me, in terms of silver, what other commodity that anyone can think of that is trading at a third of its 1980 price? And I can't think of any. And so, what is fair value? I don't know what fair value is, but I will tell you that what is happening right now with $1 trillion being put into the repo market every single night to keep the banks and the funds liquefied, the Steve Mnuchin talking about printing $4 trillion and sending everyone a check for $3,000, you could see our deficit grow by $5, $6, $7 trillion this year. I want to remind everyone, 1 trillion seconds ago was 31,688 years ago. Why would they reclassify gold as a tier 1 asset? Does it look like the dollar could collapse? Does it look like this whole system could implode? I mean, isn't a Keynesian-based economic system based upon consumption and debt and spending? And if everyone's locked in their house and not spending, what's going to happen when the system implodes? Will we find fair value in gold and silver? Probably, because it'll probably be the last man standing. And really, it's they are the only things that have been value or monetary recognized as wealth for 6,000 years. And, if we do run into a massive deflation, everyone always views gold and silver as an inflation hedge. And if we see these hyperinflationary tactics being used to stave off global hyperdeflation, still well in hyperinflation. But remember, in a deflationary period where counterparty risk is so important and so prevalent, gold and silver are the only items that are of value as an asset that are not simultaneously someone else's liability. So in either inflation or deflation, gold and silver will express themselves in their fair value. What that equates to in dollar terms, done again, I don't have a clue, but I think we'll find out sooner than later.
There are several questions we've got asking about that future world where there's a general recognition of the value, the intrinsic worth of precious metals. People are talking about what would it be like to barter in silver, or even how could you get that started in your community if there was a credit freeze, that sort of thing. Do you talk with anybody in other countries or whatever where they've actually in modern era had to use silver or gold for transactions and what that looks like?
No, I haven't. I guess I would rather I'd rather have options when others have none. The closest I can come to that is my father. I was 9 years old in 1979. The closest I can come is my father telling me that gas stations here in Minneapolis would accept silver dimes in 1979, 1980 during the oil embargo when we were seeing roaring inflation and what have you as for a gallon of gas. Now at $50 silver, that dime is worth $3-4 and a piece. So it was a good deal for them back then. But
right.
Point of it is that, look, if everyone has currency that's not wanted and worthless, what is gold and silver worth? It gets back to the question of expression of fair value. I don't know, but I guess I'd rather have something when others have nothing in terms of barterable gold and silver. And for those of your listeners who are interested in what they should own, I would say unequivocally bags of 90%. It's called junk silver. That's a bad name. It's a bad rap. In fact, it's priced higher than most of the 1 ounce premium coins are right now.
That's right.
So let's just call it 90% constitutional silver. Dimes, quarters, half dollars minted prior to 1965. The most flexible way to own silver, the form of silver with the greatest utility to be able to trade. And the United States Mint and the Canadian Mint and the Australian Mint, in terms of gold, do make coins, and those three, and the South African Mint. They make various denominations all the way down to 1/10 of an ounce. The 1/10 ounce gold American Eagle is my favorite form of gold to barter with. It's a tiny coin the size of a dime that is clearly marked 1/10 ounce pure gold. And so it's between that and junk silver, or 90% pre-65 silver, as it should be called, would be your best form of barterable gold and silver. And let's hope it doesn't get to that. But, look how fast things are changing over the past month. Things that no one would have ever thought possible are happening right in front of our eyes. And isn't that what the whole concept of insurance really is owning things, buying something to protect the unknown before it happens. And when you really don't know if you need it. And I look at gold and silver, done again, I have for 30 years. When I started in this industry, I was 19 years old, and my father and I started the company, and he said, there'll be one rule, and only one rule, or I'll fire you. And I said, well, I can deal with that. What's the one rule? He says, you will buy something every 2 weeks, or I'll fire you. Deal. I can deal with that. Now, I've been doing this for 30 years. I own the company. I'm the president. He won't fire me anymore. He's still my partner. But I've been buying something every 2 weeks for 30 years. To me, when I talk about gold and silver, to everyone who's listening, it's not an investment, it's wealth. And it's an insurance policy against everything we see happening right now. Against hyperinflation, against it all. And I think that's the way to look at it. Not any other way at all, but to look at it as wealth and an insurance policy we hope we never need to use. And if we do, we're darn glad we have it. And if not, we give it to our kids someday. That's the way I look at it.
Another thing we've talked about in the past is the historically unusual gold-silver ratio that we've seen. You've talked to us recently about how the mean is closer to like 40 to 45 over the past several decades, and now we're over 100. Masiak T asks, how many ounces of gold does Andy sell versus silver? So first we'll start with that. So from what the product that goes out the door, what are you seeing from demand from people in terms of gold versus silver right now?
7, 8, 10 orders of silver for every one of gold. Typically, the person who's protecting a larger nest egg will pay in gold because, well, Dunnigan, you could have $20,000 worth of gold, 10,000 in each of your two front jacket pockets there, and you couldn't even tell, any of us could tell that you have what, $40,000 worth of gold on you. No one could. $35,000 worth of silver, on the other hand, you'd be looking at 120 pounds, and your jacket would be ripping your shoulders off your arms. So, from a standpoint,
that's why I work out, Andy.
Yeah, exactly. So from a standpoint of really, it's a standpoint of logistics. And well, I have some people who will buy lots and lots and lots of silver and take possession of it. But most of the people who have been calling us lately have been buying silver because of its utility and because of this ratio. That ratio is as unusual as any one thing I've ever seen in 30 years of business, ever. When I look back at what's made me successful, there are a few things that stick out. But what I consider my personal best trait in this industry has been to identify and exploit price anomalies. This is a price anomaly unlike anything I've ever seen. And when you can go back thousands of years and never have seen anything like it, when you realize that historically silver is 15.5 times more abundant than gold geologically, that what's coming out of the ground right now, according to Keith Neumeyer, one of the preeminent CEOs of one of the largest silver mining companies in the world, First Majestic, he says it's 9 to 1 or even 8 to 1, I think he just said recently. When you realize that all of the silver that people have used over the last 75 years in industry, in anything you can think of just about that conducts electricity, there's silver in it, but in tiny, minute amounts. And all of those things we used from our childhood on are in landfills. No one's going to pull out 1/8 of an ounce or 100th of an ounce of silver out of a motherboard. They would if it were gold, but not silver. So silver is a depleting asset. It's found in nature in a form called epithermal, very close to the surface. So the big deposits have been found long ago. You have to dig deeper, explore further, expend more money, and actually 65% of all of the silver that is mined nowadays or more comes from byproduct mining other metals. A dedicated silver mine is a fleeting object, and I think that it's truly one of the most one of the biggest opportunities or the biggest disconnections or the biggest anomalies I've ever seen. But here again, I'll fall back on the single largest event of my career is the reclassification of gold as a tier 1 asset. The central banks are buying gold. They're not buying silver like they are buying gold. Silver was not reclassified tier 1, but remember, there's a 90% correlation through all of history. And as I've said on your show before, Rick Rule is famous for saying, gold goes first, silver goes further. It will come, it will catch up. You just have to have strong fingertips. You got to be able to hang on to your conviction. The last place you want to be right now is is too deep in dollar bills and in banks. I've heard from more people over the past week that they've had trouble getting money out of their bank than you can imagine. When things are running well and things are moving well, the whole system is great. But when things start to get gummed up like they are right now, the removal of counterparty risk, having things in your own possession, having metal, and especially getting silver at the most disjointed, disconnected price to reality from it and gold in history, it's a gift. No matter how big the premium is, it's a gift.
The same viewer wanted us to flip it around and ask from the other way. Messiak T asks, are buyback prices rising in lockstep or lagging? And has Andy actually bought silver sub $14? So can you talk to us about what do people experience when it's time to sell metal back if they want to in the future?
So it's interesting. The premiums, I was shocked to see premiums have come up quite a bit, actually, in everything. But we've done a few thousand orders in the last 2 weeks, and we've had 2 people sell back a total of 30 ounces of gold. That's it. The premium buyback on a Gold Eagle is north of 4%. It was spot a month ago. So premiums are definitely climbing. I have not had one person Not one. And we did over 5 months of business in the last 2 weeks. I've not had one person sell an ounce of silver to me. Not one. So I couldn't tell you what those. I haven't even asked. I haven't even looked. But the bid prices are rising lockstep with the ask prices. And anyone who wouldn't offer you a substantially higher bid price in this environment isn't worth doing business with.
We could turn our attention because a lot of the questions that I've been called about or emailed about from people wanting to actually acquire physical precious metals, they find themselves sort of caught in a IRA or a 401k or some big plan that their investment advisor has got them in, that's some mutual funds or something like that, and they're really rattled because of the volatility in the stock market, and they're just concerned about the stability of the banking system, and they just don't trust, with the Fed announcing unlimited bailouts here and unlimited bailouts there, that just doesn't sound like they want to have dollar denominated assets. So they're asking, what would it take to get their money out of, they say, gee, do I have to take a withdrawal from an IRA and pay a penalty and that sort of thing? So can you let us know about the reality of precious metals IRAs and just in very broad picture, what does that look like for people? Because most people aren't even aware that that's even an option.
Well, it's not an option in a 401k. A 401k is typically like a mutual fund. Basically, it's a basket of several different investments, and you'll never get the custodian to relinquish that to allow you, or I shouldn't say,
unless they're separating from the company, when there's going to be thousands, and we're told there's going to be unbelievable numbers of layoffs coming in the next couple of quarters here. So if you are in a 401k and you are getting separated from your employer for whatever reason, that might allow you to roll that over into an IRA. So go ahead.
That's right. And there's no reason to stay in a 401k if you are separated, because your choices are minimized. And so in that case, you would roll over into a self-directed IRA. So self-directed IRAs, you can purchase physical precious metals and have it in the IRA. It's really great, and again, for people who are getting closer to the distribution phase. So when you're 59 and a half, you can start taking money out of your IRAs penalty free. When you're 70 and a half, you have to start taking money out of your IRA as a required minimum distribution. What's cool about the precious metals IRA, so first of all, unless you have an LLC or a solo 401k, which there aren't very many companies that do that, there are a few, you have to have it held by a custodian. And for those people who do have the LLC or solo 401ks, I caution them to take very, very good care and be diligent about the custody of their metal. If they're going to take possession of it themselves, because if their house burns down, God forbid, or they get ripped off, Uncle Sam doesn't care. He still wants his piece. But as far as precious metals IRAs go, it's as simple as either transferring a portion of or rolling over the entire IRA or 401k to a self-directed IRA to one of the few IRA custodians who allow precious metals in the IRA. We work with all of them. We choose to focus on New Direction, as they've been very accommodating for us, and they can find that on our website at milesfranklin.com. Under services, you'll see Precious Metals IRA. You can actually enroll right there online and go right to their site. But the neat thing about the Precious Metals IRA is that it's physically held gold. And when it comes, the reason I mentioned it's great for people getting near the distribution phase, and again, is that through distribution, you can take what's called an in-kind distribution, where you take the metal that's actually physically being held for you as a distribution in kind, in lieu of or in addition to a cash distribution. So you have 100 grand in there, and let's say your required minimum distribution is 20. You could say, give me 15,000 in gold that I have stored at the depository and 5,000 in cash. So whatever you'd like. So it gives you that flexibility. For me, the neat thing about it is that you can make a bigger splash in the precious metals pool without writing out a big check, simply by transferring or rolling over an existing IRA into a physical metals IRA and then starting to take distribution of it. And maybe in the environment we are in right now, taking distribution sooner than later. Not a bad idea.
Yeah, I was speaking with a retiree who was delighted to hear that it's possible to, in fact, roll over funds directly from an existing IRA, traditional IRA, into a new precious metals IRA, and then within that precious metals IRA, direct the IRA custodian company to purchase physical metals. This isn't like certificates or paper contracts of an ETF like SLV or GLD. This is physical bars, coins, as long as they meet the purity criteria, and have those deposited in a vault depository that's has the relationship with the IRA custodian, and so you actually have physical precious metals in your IRA. So that, folks, if you aren't aware that that's an option, it absolutely is provided for. It's been around for quite some time, well proven, and completely approved by the IRS. You can find it on their IRS website. So it's been a real eye opener for some people to realize they can do that.
I'd like to mention one thing.
Go ahead.
One thing, too, I'd like to mention, you mentioned GLD and SLV. You can see today the difference between GLD and SLV and physical in the premium. GLD and SLV are just price representations and would be a factor of the price. They don't take into account the fact that the whole industry is saying silver is 25% higher than it really is, and gold is 8 to 10% higher than it really is based upon the premium of getting the real thing. And so, I always like the analogy, if things get real bad, do you want stock in Kellogg's or boxes of Frosted Flakes? And so that's the difference between GLD and a gold coin in your hand. So it's one's a paper representation and the other is the real thing.
Well, we've been talking with Andy Schectman, CEO of Miles Franklin Precious Metals. Andy, I want to reiterate for people here that I am now a licensed broker-dealer representative for Miles Franklin. People can email me at libertyandfinance@protonmail.com and send us your name and phone number. When you do that, that speeds up our reply to you so we can get you, understand what you need, what you're looking for. And Andy is the guy who can find things and find out what's available when nobody else seems to be able to, and get you the better price. Can you talk for us a minute about pricing? Because it seems unbelievable to people that there's this enormous demand right now, and yet the prices have been down. And then they say, oh, but there's nothing available. But actually, you can get stuff available, and it must be at a really high price. No, it's not at a really high price. What kind of pricing claims can you make and follow through on for people?
We'll beat any price in the industry from a nationally listed dealer, any of the online companies. We just choose not to be online for various reasons that I've discussed lately, most of which related to privacy and identity theft and fraud. But when it comes to price and availability, I'll get anything that people are looking for that's available right now. In normal times, I can get anything anyone else can. But I can also beat any price in the industry, and we've made that declaration recently and haven't had a problem doing it. Just so people know, you have to have a little bit of patience right now. Even if the product is in stock, the shipping departments of all the precious metals companies right now are working overtime, 10 times overtime, and they're at skeleton crew. They're doing social distancing. They have fewer people. It's a tough time. It's a tough time for all of us. And we don't ever confirm an order done again unless I have already paid for it and know it's on a truck to me or in my vault or promised to me by a prominent dealer in the United States. So just so people know, we have feelers out through every single major dealer, small dealer, coin shop, major mint, major refiner. We know them all. We've been working with them for 30 years, and they know that we'll pay them right away for it. But when someone says to me, well, I have 50 gold eagles, I'll send them to you, and I know this guy, and I've been working with them forever, it's now on my inventory list. A client calls me and they says, can you get some gold eagles? I say, yeah, I can get 50. Well, how long out is it? Well, it should be a week or 10 days. Well, what that means is my buddy who I've known for 20 years, who's going to sell me, who's already committed to selling me, I've already wired him the money. He's got to box it up, ship it to me. We have to receive it, unbox it, repackage it, ship it out. There's time involved. But do know this. When we make a claim that we'll beat any price, we will. And when we accept an order, it's been confirmed and we will deliver 100%. And as we said earlier, if something happens, it'll be put in a vault, in a military-grade vault, insured, segregated, for free, indefinitely, until such time that people are able to retrieve it or we can ship it. So sorry for answering in such a long-winded way, but yes, we'll meet or beat any price in the industry, and it will be our pleasure to do it.
No, I think that's exactly the kind of real, down-to-earth, boots-on-the-ground reality that people want to understand, because they go to these various websites and all they see is, back order not available, and they just don't know what's really going on, but they do now. So thank you, Andy, for joining us here on Liberty and Finance and Reluctant Preppers.
Hope to be back again soon, Dan, again, and we couldn't be more happy that you're part of the team, and keep doing what you're doing and take care of yourself.
It's really been gratifying, because when I'm able to take these calls in the evening, my wife also, she says, go take the call. I said, well, all right. And I'm talking to these people. They're telling you, their real story, the things that the struggles they're going through, the concerns they're having. And at the end, when you know that you've gotten them what they need and you've met that need for them, that you can hear the relief in their voice. And it reminds me exactly, that's how we felt when we started to make those steps, getting out of complete dependency on the stock markets. Now we're not tied to that, and we're not tied to the fates of what's going to happen down at the bank down the road. So it's a good feeling to get that sense of freedom and independence that comes in. It's just very gratifying to be able to help people and to hear their stories.
I couldn't agree more, and many of the people who are listening right now will tell you they've heard from me in the last few days. I call, and people are always like, is this really you calling me? Why am I not talking to one of your salesmen? Because of what you just said. It's addicting. I've been doing it for 30 years. I may be the owner and the president of the company, but I find that the most gratifying part of my career. I love talking to people, hearing their stories, helping them, and I go to bed at night sleeping very, very well, knowing that I'm trying my best. And if I can do it at the lowest price in the country, great. And I will. I'll keep on doing it. And so thanks for saying that. I couldn't agree more. And we couldn't be happier that you're part of the team. You're a top-notch gentleman, and we're excited to be associated with you.
Well, thanks, Andy, for being here with us. And our viewers really appreciate that.
Have me back. I'm back anytime.
If you've decided that now is the right time for you to protect your family's financial future by acquiring physical precious metals, gold and silver, I'm delighted to let you know that I have now become a licensed dealer's representative for Miles Franklin, one of the oldest and most trusted names in bullion dealerships. And we can provide you with physical delivery to your personal possession or to professional vault storage or precious metals IRAs. Just email me at libertyandfinance@protonmail.com, and please include your name and phone number in your email to libertyandfinance@protonmail.com. We'll get right back with you and find out how to best meet your needs so that you can either begin or increase your acquisition of physical precious metals now and protect your family's future starting today.